The saying, keep some dry powder, originated in the military when soldiers used dry powder in their guns and cannons. A soldier needed the powder to be dry in order for it to work effectively. If it was not dry, it wouldn't fire, and the soldier could be in big trouble. Today, the term dry powder is used in reference to the stock market and refers to keeping cash reserves for emergency funds or funds for asset purchases. This current correction will end, and you will need to look beyond it for opportunities. So you need to have some dry powder. So let's take a look. This is part of the problem in the markets recently, the 10-year Treasury. It isn't necessarily the current level, which is over 3.2% and near a 7-year high, but how quickly interest rates increased. The yield surge started on Wednesday after new data showed private payrolls rose to 230,000 in September, which far surpassed the 168,000 jobs in August. Elsewhere on Wednesday, the ISM non-manufacturing index hit its highest level on record. And then also, comments from the top Fed Reserve officials also pushed yields higher. On Wednesday, Fed Chair Powell said that the U.S. central bank had a long way to go before interest rates hit neutral, suggesting to the markets that more hikes could be on the horizon. So let's take a closer look at interest rates. We're looking at the 6-month daily chart on the 10-year Treasury, and the symbol is TNX. As you can see, we topped out here earlier this week. In the last couple of days or so, we're heading on down. We're still above the 20 and the 50 EMA, but I think we're heading on down. Looking at the MACD, we've had this move here with the reflection off the slow line and then up here, but I think we're going to pierce through the slow line and head on down. Perhaps not unlike this move here, came and went down on through. It took about a couple of weeks or so, and then had another dead cat bounce and back down here. So we're on our way down, in my humble opinion, and that is shown here also in the histogram. We had a higher high there and lower here, so we're heading on down, and I think we're going to head through the zero line there. This is also shown by the RSI as well as in the stochastic and then into the Williams. You can see that in that move there. Back up here. Now, even though we're heading down, I think that this is just a preliminary move. I think that we may go higher in subsequent months. So stay tuned for that. I'll show you more on that in another video. But for now, I think the markets will probably start calming down, maybe even Friday of this week. But hopefully into next week, things will calm down. And I think we'll have a little bit of a rally in the market. But now let's go take a look at the volatility index for a little bit more insight. We're looking at the 6-month daily chart on the volatility index, and the symbol is VIX. The chart itself, I think, is a little bit incorrect. I think we did have a high of 28 and then a low of about 20, and this chart is only going up to about, say, 25. So I think the high went even further up. So a little bit misleading, but for the most part, I think this chart is fine to use here. In my opinion, we're having a little bit of a market tantrum, and the VIX is spiking, but I don't think this is the big one. This happens every so often, and again, in another video, I'll show you a little bit more details. But for now, I think we're just having a little bit of a tantrum, and I think it's going to calm down here, hopefully into next week or so. Looking at the MACD, we're heading on up in that, as well as in the histogram. The relative strength shows that we just had a little bit of a turn there. I think that we may do a little bit of sawtoothing here for a few days or so, but I think again we are going to head down. The stochastic, we're almost up to the so-called overbought area. Of course, there's no overbought area for a VIX, but that's what it is. And we're up to that level. And we haven't been up at that level since earlier this part of 2018. And I think we're just going to come up here maybe temporarily and head on down. I think this is just a small temporary eruption going here into the Williams. The Williams hit the top. It's coming down and may do some sawtoothing up and down here in the next few days into early next week or so before perhaps it does calm down. But in my opinion, we're probably something like this area there where we headed on up and we had a little bit of tantrum in the market. You can see here as well. And then into the actual the MAC there, and then the actual price chart. A little bit of volatility. We are much higher here than back here, but still I think it's going to be the same. We're going to calm down, and then we're going to be able to see a little bit better, a little bit further into the future. And that's what I want you to keep the dry powder for, because there's going to be some opportunities coming up, and there actually may be some in the market right now. So for today, that's Chew Dog Charts. Thank you.